Next, let's walk through the assets section. Property, plant, and equipment, which is called PPE in short, are long-term assets crucial for the supermarket's operations. They include tangible assets such as land, buildings, machinery, and equipment used in the business. These assets are classified as non-current because they are expected to provide economic benefits over multiple years. PPE are recorded at their historical cost and depreciated over their useful lives, reflecting their gradual usage and wear and tear. The total property, plant, and equipment presented in the balance sheet of Sunshine Supermarket is $475,850. Investing in PPE supports the supermarket's long-term growth and operational capabilities. Other non-current assets consist of various long-term investments and intangible assets not classified under PPE. This category may include long-term investments, patents, trademarks, and goodwill. These assets are not expected to be converted into cash within a year and provide long-term value to the business. Sunshine Supermarket's other non-current assets total $23,330. Moving on, cash and cash equivalents represent the money readily available to the supermarket. This includes not just the physical cash in the registers, but also the balances in the supermarket's bank accounts. Additionally, cash equivalents also include short-term, highly liquid investments that can be easily converted to cash, such as treasury bills and money market funds. On the balance sheet of Sunshine Supermarket, the balance for cash and cash equivalents is $154,170. They are crucial for daily operations, allowing the supermarket to pay for expenses, buy inventory, and handle other financial needs. Since cash and cash equivalents are already liquid or can be converted to cash quickly, they fit into the current asset category. Accounts receivable represents the money owed to the supermarket by customers who bought goods on credit. It is an asset because it is money the supermarket expects to receive in the future, increasing cash flow once collected. In a business, accounts receivable involves more structured agreements and credit terms. This allows customers to buy on credit, which can boost sales by making it easier for customers to purchase goods. Since accounts receivable will typically be collected within a year, they are considered current assets. Sunshine Supermarket has $195,975 in accounts receivables. Receivables increase when sales are made on credit and decrease when customers make payments. Next, inventory represents all the products the supermarket has in stock, ready to be sold to customers. It is considered an asset because it has value and can be converted into cash through sales. Since inventory is typically sold within a short period to generate revenue, it is classified as a current asset. In a business, inventory includes not just finished products, but also raw materials and work-in-progress goods. On the balance sheet of Sunshine Supermarket, the total inventory balance is $387,200. For Sunshine Supermarket, inventory is crucial as it represents potential sales and revenue. It increases when goods are purchased and decreases when goods are sold. Other current assets include various short-term assets that do not fit into the categories of cash, receivables, or inventory. These may consist of prepaid expenses, short-term investments, and other receivables. Since these assets are expected to be converted into cash or used up within a year, they are classified as current assets. Sunshine Supermarket lists other current assets as $59,125.